So no big surprise here. The Fed have cut rates by 25 basis points. But what was more interesting was Powell's commentary afterwards following the decision, which is very much around, one, the US inflation number at 3%, and two, the problem they have currently with unemployment. What drives a central bank to cut rates is controlled inflation or on-target inflation and the need to push growth. Actually, from watching Powell's commentary, it was really the growth and the employment story that was more prevalent than inflation. Inflation's at 3%, still above 2%. But remember, delayed impact interest rates have. If you cut a rate today, it's not going to have an impact on inflation for 6 or 12 months' time. What does this mean for the Bank of England next week? Not a great deal. To be honest with you, if the UK inflation number is at or above 3.6%, the Bank of England shouldn't be cutting interest rates because there's not an economic reason to do so. Okay, employment again here wasn't great, but inflation is the bigger beast here. We cut rates now and inflation doesn't come under control. You could create an overstimulation in the economy, which keeps inflation higher. Not to mention the fact that if you cut rates, you reduce the strength of the pound, therefore imports cost more, and that gets passed on to the consumer. So inflation is higher anyway. You're essentially importing inflation. My name's Dave. I'm from Lucid Financial Markets. Follow me for more.